The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Monday morning, 9:06 a.m. We got quite a market to kick things off, folks. You have the S&Ps now, negative by 4 points, but you talk about some volatility this morning. Markets accelerate lower last night. We reach a low in the S&Ps of 43.54. Then you have Mr. Putin. He comes on Russian state TV. He says okay when his foreign secretary talks about maybe pursuing diplomatic means. The market accelerates from a price point, folks, on the S&Ps. 720 this morning. It really accelerates. 43.76. You trade up to 44.20 right now. You're almost back to even. You see the seesaw action on both directions. Now, jumping over to Asia real quick before we jump through the markets. How about the Nikkei? Down more than 2%. As investors were talking about the Ukraine tension, oil was rising over 1%. So but U.S. futures steady on Russia diplomacy optimism. You have Lavrov sitting at a big, long table across Putin. He says, proposal that Russia continue talks with the U.S. and its allies. You have Putin says, all right. One word or two word, however you call it. The markets accelerate higher on those two words alone, and there we are. So you get the S&Ps above 4,400, the NASDAQ 100, man. You pop from a price point of about 14,066 up 200 points right back to where you were at 3 a.m. this morning. Dow's negative by 38 points, 34,592 in the Russell. Positive by 2 points right now. You talk about some volatility in the Russell. We jump over to crude. Crude, kind of inverse in the market right now. You talk about accelerating with the market really, but didn't get the pop. You were up to $94.49 last night. You're at $92.59. Almost made to $95 last night. Man, this crude market. You take a look at that crude market on daily. It just doesn't stop, folks. Anytime you get a pullback in this market, it is dwarfed by the way this thing accelerates higher. Gold contract. Up $22. There's an acceleration for gold. Gold pushing the highs that we had back in November. I know my dad's got a gold report update out there for you gold report subscribers. Check it out. If you're not in the gold report, great time to get into the gold market, folks, and check out the action. 1864, gold up $22 right now. And we jump to the VIX. Volatility index right now, 29.58. We put it on a 15-minute basis. There's your acceleration last night up to 32 handle in the VIX. Now, for some context here, you put this thing on a weekly. We just got a spike to 38.94. We're now back up to 32 and change, the spike on the VIX. Not often do you get these double peaks in the VIX. Usually you see that fear accelerate, you reach the peak. We reach a peak at 38.94, and just like that, we're back up to 32.94. I mean, you look at it, only once in almost the last 12 months. No, and that's even getting to 31.90. So only once, in over a year has the VIX been above 32.50. And that was back in November. That was when Omicron just first hit, if you recall. We went away for Thanksgiving, came back for the half of the day on Friday, and things were accelerating into the weekend. Two peaks above that area of about 32.50. We reached 32, what did we make? 32.04, technically the high on the VIX. And we got to jump to notes and bonds. And that is a reversal of the overnight. So we trade back down. We're talking about negative by 6 ticks. You were as high as almost 126.26. We give back 20 ticks right now. We are right basically where we were coming into the close of action on Friday. All right, so jumping back to what will be the story of the day the day is young, right? We don't even start trading for 20 minutes. But the way the stocks have reacted, pushing out on state TV. This was broadcast on Russia state TV. Now, they said at the same time, you have German Chancellor arriving in Kiev due to fly to Moscow for talks tomorrow as efforts to reach a diplomatic solution continue. Not to say whether it's gamesmanship gamesmanship or not. Markets sold off earlier on concerns that a deterioration in Ukraine could add to price pressures if supplies of Russian energy and Ukrainian grain are disrupted. Russia is a major producer of metals such as aluminum and nickel. It accounts for about 40% of palladium that's used in catalytic converters. Russia and Ukraine also account for nearly a third of wheat and barley exports. Pretty remarkable. So I just want to go down this list. Now, palladium, this is Russia's exports as a share of global production. They got some exports, man. Palladium, they're almost pushing half of the global production. Platinum, 15%. How about gold? Almost 1 out of 11 ounces of gold is pulled out of Russia. Oil, they're pushing 8.5%. Gas, nickel, wheat, aluminum, coal, copper, and silver rounded out. Quite a share of that. One question for investors is whether stocks forge lows for the year near the end of January or face more pain. Yeah, that's quite a question indeed. So with that in mind, now you're going to hear a lot of talk about this, of course. And this is just one of them. You have Morgan Stanley's Wilson saying potential Ukraine war, a polar vortex risk to stocks. The risk here is that you could push economies into recession, posing another significant risk for equity markets. You pile that onto the hardship that many companies have faced during the pandemic, right? We're trying to come out of that. You have a potential war in the region. I'm just trying to understand why the markets are reacting so much to that situation. It's a horrible situation, but if it remains isolated, is it going to impact world markets? Well, you're seeing some of the cases and how it could, right? You could push those economies into recession, and that could hit equity markets around that area. You could see problems with just raw commodities that Europe needs. Well, it's going to be an interesting one to see how that plays out. I would have loved to see the backdrop to KGB Putin and how he lines up that meeting with Lavrov. They got state TV in there. And Lavrov says, basically, sir, we must try diplomatic reasons. You know, I'm exaggerating, folks, but you got to see it's all gamesmanship. So the market reacting so harshly to something like that, maybe war's been averted for today, which is why they do, because there were some talks of even Tuesday, something like that thrown around. Who knows where they get the exact day. But war seemed like it could be imminent. That's not a good thing ever. And so maybe this just a slight pause for the market to bounce things back. But with that, we jump to markets in positive territory, the S&Ps. Let's jump over to Bitcoin. So Bitcoin had quite a night last night for the Super Bowl ads. A lot of crypto, a lot of fintech out there. You have Bitcoin up $60. We jump over to Coinbase. They had quite an ad. We'll jump over to them. Coinbase opening flat to negative. That's quite a spend on the Super Bowl ad for Coinbase. They were the one that had the code jumping around the screen that you had to scan. I did not scan it, but if you did scan it, you might have had trouble getting to the site, as they actually had to throttle traffic after their Super Bowl ad. You spend all that money and you can't even handle the traffic. That's a bummer. Throttled for a few minutes after an earlier surge. I wonder how much business they could have lost in a few minutes in that time that you have to get the people that saw your ad to come to your site. Users on Down Detector flagged the problems after the Super Bowl ad, so they throttled it for a few minutes. More traffic than we've ever encountered. That's usually what happens. I guess it has to do with a $15 deal if you open a Coinbase account, and if you already have one, you can enter a $3 million drawing or something like that. But crypto, we're going to do that a little bit more, but Coinbase opening flat today. Stay tuned, folks. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&P's negative by 2 points right now. NASDAQ 100 negative by 10. Let's jump around to some of the FANG stocks, see how we're going to kick things off. You jump over to Amazon shares. Looks to be about negative by $10 as we start off the trading week. Microsoft shares down more than $1 right now to $293. We were as low as $289 in the overnight session. Apple shares this morning down to $165.25. You pop to $167.86. Remarkable how you get such an acceleration. Google shares, not quite the volatility. Google looks to open barely in the negative. We jump over to Netflix shares. Netflix is slightly in the red as well. Let's jump to Facebook. Facebook shares actually in the green, but they were affected as well, bouncing back. We jump to some of the banks this morning. You got JP Morgan, everything getting hit, right? Bank of America, barely in the green right now. Wells Fargo, barely in the green. Let's jump to some of the travel stocks that have been rebounding. You jump to Delta. They gave it back on Friday with the general market, but it was a decent week up until then. Delta shares right now looks to be basically flat. Jump to some of the domestic. Southwest, basically flat. We jump to Airbnb. I think Airbnb's got their earnings this week. Jump over to earnings. Yeah, Airbnb will be out with their numbers tomorrow. So you're talking about a $15 move priced into that equity. This thing has quite a rebound. I mean, this ever gets back down, folks, you're looking to get an Airbnb 138. You know, you really want to try and let this thing test 131, but you ever get a pullback in some of these growth companies, you know, keep some that on your horizon here. And you should have a little bit of cash potentially available because look at this chart on a 3-year weekly basis, right? You just go from 2,100 to 4,400. You take the peak trade prior to COVID, and it's not even fair really taking the peak trade as in the peak pricing because we rise from about 3,400 to 4,400. And that's taking peak to current levels, okay? But you got to consider, folks, that we just traded from 2,800 in September of 2019. The economy was great, September of 2019. Economy's great. We come into COVID. Economy's even great, 3,400. From October of 2019, so we're pushing 2 years and 4 months, the market's up 50%. Got to keep that in mind as we come into a little period of volatility with rates that will be rising. Okay, you jump over to the headline this morning. So we have some Fed speak. Not too surprising considering what Fed President, St. Louis Fed President James Bullard has said previously. He was out there last week talking about, I believe, a full point by July, which is 4 rate hikes by then. That is one of the things that sent the economy a little bit lower last week. He's out there making the case that they need to front load more of the planned removal of accommodation than we would have previously. We've been surprised to the upside of inflation. This is a lot of inflation, making a lot of sense. Credibility on the line here. We do have to react to the data. However, I do think we can do it in a way that's organized and not disruptive to markets. The question, of course, is whether we get 25 basis points or 50 come the March meeting. We get one more CPI print on March 10th. That's probably going to be the biggest data point for the question of whether we go 25 or 50. If it's still accelerating, you could make the argument you go 50. What to consider, though, is that the market is very, very aware that we are getting rate hikes to the tune of probably 7 or 8 over the next 2 years. Is it a huge, drastic difference if it's 50 basis points or 25, especially if the market's already pricing in a 50% chance that happens? This is not like some surprise 50 basis point hike in the middle of the trading day that has to happen. Now, on the flip side of that, as you consider whether the Fed might go to 50 basis points, you have other members on the Fed Open Market Committee. It's virtually all have expressed the desire to start raising rates in March. Bullard has been perhaps the most hawkish, keeping things in perspective, okay? Several other officials have said they think quarter point, okay? You just had San Francisco Fed President Mary Daly out on Face the Nation, CBS's, I believe that's supposed to be CBS, come on, CNBC, Face the Nation this Sunday. History tells us with Fed policy that abrupt and aggressive action can actually have a destabilizing effect on the very growth and price stability we're trying to achieve. So what I would favor is moving in March and then watching, measuring, being very careful about what we see ahead of us, and then taking the next interest rate increase when it seems the best place to do that. But Bullard insisted that inflation has been running hot for months, and the Fed needs to be forceful in using its tools to control price increases. There are the two camps, right? And as long as there's two camps within the Fed, I imagine Chairman Powell is probably okay unless we get a really hot CPI, which is totally possible. You see things accelerate month over month, like 0.7%, 0.8% or something like that. Maybe they'll do it. Maybe they'll come the next week. We get that CPI print for February, March 10th. That's a Thursday. You then have the Fed meeting beginning the following Tuesday with an announcement Wednesday on the 16th, 2 p.m. Eastern time. So the 10th, March 10th, my grandfather's birthday, and then March 16th will be the day that we get the Fed meeting and we find out whether it's 50 or it's 25. But the general consensus is, folks, the market has figured it out. Inflation is running crazy hot. We got 1 million jobs added for the month of January. When you combine the jobs we added plus the revisions we got in the prior months, you're adding 1 million extra jobs than the market thought. You have inflation running hot. The Fed is telling you that we're hiking, and the economy is strong and can handle it. And I'm not doing that to scare you. I'm doing that to say the market is pricing that in. You know, there is going to be volatility in both directions. We may have lower to go here as the market adjusts to this type of volatility. But I don't see that really destroying things just yet, because the market has priced it in, folks. That was the sell-off that we got in January. We're now 2 weeks into February, okay? You look at the daily, you accelerate January 24th, January 28th, you finally get a pop. January 31st, we trade higher. We're basically back to where we were chopping around towards the end of January. There was your reset where the market figured out, hey, inflation's way hotter than we thought. 4,800 is not appropriate. Maybe an area between 4,300 and 4,500 is more appropriate to bounce around right now, as rates are going to be going up 1 to 2% over the next year. But also during that time, what we got, and I know this is like big picture, just thinking things out, but also during that time, what we got is we got Apple crushing it out of the park on earnings. We got Google crushing it out of the park on earnings. A lot of companies, to name a few, crushed it out of the park on earnings. Microsoft, right? Strong numbers from Microsoft even in a big way. Microsoft is still trading $55 off the highs it made twice last year. These are what the pricing structure has done of rising yields that is priced in. We're going to have some volatility over the next year at least, if not two, as we raise rates and the market tries to decipher what the true value is, especially of growth companies that were dealing with some serious multiples. Good thing as a trader is the economy is strong, and we got a VIX right now that is pushing almost 30 at 29.27. You put it up on a daily, And yeah, that's an area that maybe we peak. You know, you back it up. This daily goes back to March, so you're talking about a year ago, okay? And you see our last spike was the end of January, and we're nearing levels that the VIX has usually spiked yet again. You go back to last year, 32, 29, 25, 25, 29, 35, and 28. And we just hit a price of 32.04 this morning. All right, let's jump around to see what else we have. Check in on the commodities. Crude, maybe the trade of the pandemic, going from negative prices to push $92. I was reading some articles about crude this weekend, and let's just say they were all bullish with that cruise price. 94.94 seems like $100 is all but inevitable. There it is on the chart. And folks, we have just become very used to cheap oil, man, especially in America. You back things up on a monthly basis. We were very used to $100 a barrel for the tune of 2011 all the way through to 2014. Not too surprising that we might get back to that level at some point. Stay tuned, folks. We'll be right back for the open.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We get the S&P kicking the trading week off down 2 points right now at 44.07. We get the NASDAQ 100 down 22. The Dow off 44 points. The Russell actually in the positive by 4 right now. You got Bitcoin basically flat at 42,740. You got the crude contract right now giving back some of the gains you had overnight. last night. We're up to almost $95 right now. You're trading down 60 cents on the session at $92.49. You jump over to gold, up $21 at $18.63. The highs of Friday, $18.67 in gold. And we jump to notes and bonds right now. You got the 10-year. Jump around. You get the 10-year right now trading with a yield of 1.984%, just under 2% right now. We give back in terms of, we were trading 5 a.m. this morning at 126.26. You're approaching 23 ticks lower as the yields rising yet again in this market. And we just like that. We got all the markets in the green. Let's see how the FANG stocks are reacting. Amazon down 0.2% right now. The big dog Apple down 0.2% right now. Microsoft shares in the red as well. Google, check that out. All of them in the red. And you have the NASDAQ 100 barely in the green. Not the usual happenings. Let's see. Netflix shares up by about 0.5%. We jump over to Meta, Facebook, flat on the session at 219 right now. Okay, let's see what else we got going on. Jumping around some of the headlines. Speaking of inflation, so HSBC, they're going to double some junior banker bonuses in a race for talent. More senior staff are in line for at least a 10% bonus uplift. They shrank the pool for the bonuses by 15% in 2020. But folks, 2020, that's like a couple decades ago in terms of where pricing was for inflationary tendencies. Excuse me, plans to as much as double bonuses for some of its junior investment bankers and traders in a bid to catch up with rivals on compensation. It's good to see it happen. You know, these bankers make lots of money. And you always hear the stories of the junior bankers that have to work 80-hour weeks, right? And maybe if you hang out for 2 or 3 years, you make it. But they probably deserve a pay hike considering the billions that these banks are making. The lender, which paid less than most of the rivals a year ago after cutting the bonus pool by 15%, they want to avoid losing junior staff. Yeah, competition, man, you're seeing it. So they got 2021 bonuses, hikes of at least 10%. 46,326 is their head count. Quite a number. Overall expenses for the first 9 months of the year had risen 2% year over year, in part as a result of the rise of performance-related pay. I'd say they gotta jack it up a little bit more than 2%. Goldman Sachs spent an average of 23% more per an employee last year. 23% more. Human capital, folks. There's nothing like it, you know. You got to have the money to pay the people to have good help to help you run your business, especially if you're probably doing the type of business that these banks are. HSBC reports next week. They got a strategic overall going on, but yeah, I'd say they're just barely trying to keep up. How do you keep up with Goldman when they're jacking up pay by almost 23% over a year? But that's the case, folks. I mean, if you're living in Tampa right now, I say it all the time, rents are going up 20% a year. Real estate is going up 20% a year. A house that costs $300,000 might cost $360,000 in 12 months. We live in interesting times is the expression, but boy, it really flies right now, I think, in a big way. All right, what else we got going on? Let's jump to some of the stocks that are moving this morning. No real huge companies out with earnings yet this morning, although I'm going to go down the list because we do have some interesting companies this week that are out with their numbers. You have Splunk and Cisco made a $20 billion takeover for Splunk, according to people familiar with the matter who spoke to the Journal. You have Splunk up about 8%, Cisco a little bit lower. You have Blackstone. They're buying casino operator Crown Resorts. I'll tell you, folks, these private equity firms, they're not messing around, right? They're going to roll up some of these companies. They're going to make money when we break out, folks. I went to the zoo this weekend, took little Tommy to the zoo on Saturday. It's pretty cool as we break out of this thing, man. Whether, it's pretty cool. Let's leave it at that. And the travel stocks were reacting last week, and I think they have a long way to go. Some of those travel reopen stocks, et cetera. Rivian, Soros Fund Management, they got 20 million shares of the electric truck maker during the fourth quarter. $2 billion at the time of the purchase, but it's fallen to about $1.17 billion. Just an easy we'll be exact, just an easy $830 million loss since Rivian has gone public. That was a misstep by Mr. Soros. Rivian trading up 4% with the market. We put this thing since it's gone public. be careful of some of these equities, folks, right? You had a pre-revenue company, and what were they pushing? Because I remember talking about it. I watch Shark Tank sometimes. It's interesting. So they're a $55 billion company at this price level. Jeez, what did they get to? 3 times that? So they were pushing a $160 billion company. They're a $160 billion company that was pre-revenue. They haven't taken in a single dollar. Probably got a little bit ahead of themselves, but probably a very successful company in the future. But even some of the brightest investors out there got duped as you take a $2 billion position, and just like that, it's valued at about $1 billion. Yikes. Tyson Foods. So they get downgraded to equal weight from overweight in a valuation call. They're already up 12.4% this year. Limited upside potential at current levels. That's what Barclays talking about. Strong quarterly results already priced in. TSN is their symbol. Yeah, quite a run indeed. Back things up to where we were in August at $68. You run up to 100. We give back some of it. You're barely red right now at 97.30. You put this thing on a longer term, just above where we began the pandemic for Tyson. Finally, from a slow crawl from $42 up to 100 last week. Yeah, and TXN, Texas Instruments, they get a downgrade as well to market perform from outperform. Unanticipated details surrounding the late cycle increase in capital spending. TXN, that's the longer term. That looks like a little bit of a rollover there. Be careful. You consolidate between 180 and 200. And boy, this thing, since about November, just been sliding on a weekly basis. We put it on a daily, just chopping around, but lower prices coming into the lows we had almost a year ago, back in March of 161. Let's put TXN on a longer term. Yeah, because boy, you get below this 160 level, right? I mean, that was a one-way shot from the COVID lows to the end of 2020. 160 to 93, Texas Instruments. All right, what else do we have pulled up here? Powell confirmation. Yeah, so that begins Tuesday. So you have Chairman Powell and, yes, the Senate Banking Committee. So the Senate Banking Committee is going to hold votes on the nominations of the Federal Reserve officials, including the current Chairman Jerome Powell, and hear testimony from Treasury Undersecretary for Domestic Finance on the President's Working Group report on stable coins. That is Tuesday that will happen. Interesting, tomorrow. The Senate is also going to hold hearings on enhancing U.S. trade and promoting American exports. All right, yada, yada. But nonetheless, so that'll be Tuesday. We'll get some Fed speak to sprinkle on everything else we have going on in the market right now. And you're seeing it continue, folks. High yields coming back. Look at that drop off. We are back to basically where you were Friday morning in the 10-year, 126.01. Folks, last night, not even last night, 5 in the morning, 126.25. We're down 24 ticks just like that right now in the 10-year. And you are at 1.991%, the yield on the 10-year. We got markets, though, in positive territory. Stay tuned, folks. We'll be coming back. I'll go over the companies we have with earnings this week. We got Shake Shack out with their numbers. We have Roku as well. Stay tuned, folks. I'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now. We'll call it flat at 4409. I put this on a 30-minute chart. You go back 10 days right now, so you're going back a couple weeks. The last couple weeks, you see that double top, 45.86, and man, it was quite a quick sell-off. From last Thursday, you get the CPI data. Zooming in on the action, you get one reprieve in the morning, and then the sell-off begins. Friday, you come into the opening bell with some higher prices. The sell-off begins. Last night, we sell off again, and guess what, though? We're sitting basically flat. Are we going to get another sell-off? I don't know. We'll find out. I'm going to put it back going 20 days now on an hourly. Okay, there's that top. Here's your trend line. That trend line on the S&P, there's your daily action, okay? So you see where we are. Double top, man. I mean, this formation, right? You got a double top. Now, the only thing I'll say is this is going back to January 27th, okay? So backing this out yet again, zooming in on the recent trend, and pulling in a Fibonacci retracement to see where we're at in that retracement right now, you bounce right at near that 618. The tail goes much lower, but we're right above that level right now, 43.84. And that is just the retracement from where we've been January 28th, the bounce up to 45.82, and the pullback since then. Because we go below this 43.84 level, probably going back to 42.62, which is almost 150 S&P points from where you are right now, as we get the S&Ps turning a little bit negative. And we're negative by 5 points right now. Okay, jumping around to what else we have going on. So I mentioned the CPI data, which is how the market began the sell-off last Thursday again. We get PPI data this Tuesday. Yes, Tuesday. Not as important of a number, but it's expected to rise 9.1%. That would be below the 9.7% jump you got in December. That was the fastest on record. PPI, we talked to our man Kevin Hincks Tuesday, Wednesday, Thursday. As he mentioned, PPI not as high on the ranking as CPI. When you look at inflationary tendencies, because that's at the producer level, it's not always coming down to the consumer level. CPI much more important. But then when you talk about earnings, getting into the companies with earnings. So we get a little bit of travel on Tuesday. Started off with Marriott. Now we're going to put this thing on a 3-year weekly for some context here. You have Marriott, pushing highs on a weekly basis. That's going to be all-time highs as well. You back it up on a monthly basis and see where we are. So back to a 3-year weekly. We jump over to the earnings tab. You're talking about a $9 stock, $9.71 move. Marriott has their numbers tomorrow. Airbnb also with their numbers tomorrow. Almost a 9% move. $15.20, the move priced in for their numbers tomorrow for Airbnb. We also, in the gaming sector, we get Roblox. They'll be out with their numbers now. You want to talk about some volatility. How about almost a 20% move priced into the options? But guess what? There's some volatility for you, man. From 141 down to 53 bucks, up to 67. They were the most expensive market valuation for a gaming company out there when they pushed 141. But boy, they gave it up in pretty fast fashion from 141 to 53. So they'll be out with their numbers tomorrow as well, Roblox. We get Viacom tomorrow as well. Fast forwarding to Wednesday, we get Shopify. This one's been an interesting one with some volatility. Shopify, you're talking about more than a 10% pop, more than a 10% pop in either direction priced in. Now you take a look at the chart of Shopify, almost a similar one to that of Roblox, right? Some of these growth companies, man, the pullback from 1762. How about just getting cut in half like that? You're trading at 852. Now Shopify, you're still talking about a company right now. Come on, load for me. It's not cooperating. All right, I'll pull up their market cap. Still a very highly valued company, but man, you talk about a pullback, but they have $95 priced in for their earnings as they're out on Wednesday. We also get Kraft Heinz on Wednesday. We get AMAT on Wednesday as well. So it's going to be an important week for earnings. They'll be out with their numbers. AMAT, you're looking at almost a $9 move. Boy, you talk about some moves. Sam Adams, man, maybe they're finally back to an area. Now, Sam Adams, $38 move priced into this equity. You're trading at 43 bucks, so maybe about a 9% move in either direction. Hard seltzer is not the future, folks, and unfortunately for Sam Adams, that's the case. But they give it all back, and I'd say that stock has figured out that hard seltzer is not the future. You still get a strong company in terms of the beer that they produce. Sam Adams back to 430. You got a $38 move priced into their earnings, and you also get NVIDIA out with their numbers. NVIDIA, just looking at a couple Fibonacci numbers. Let's back these off. Whoops, I duplicated. I want to remove them. Come on. Remove that one and remove that for some clarity, please. Back to 244 from 346. You jump over NVIDIA, 10% move priced into their numbers on Wednesday as they were out February 16th. We jump to Thursday. Thursday, you're going to get Walmart and you're going to get Roku and Shake Shack. So it continues. Walmart, you're looking at about a $5 move, not the type of volatility that some of these growth companies have, but you talk about some volatility. This is another great company, folks. If you are looking for any type of an entry, $24 move in either directions, $160 for Roku. They're out with their numbers on Thursday, and there's a pullback for you, man. From $490 on 2 occasions last year, you're trading at $162. You're actually below prices that you were trading at in Roku in September of 2019. Now, it's important for some of these companies. We'll jump to Peloton in a second, but this one matters. You know, if you really get a max pain situation in a company like Roku, how far do you have to go until somebody looks at purchasing them? Because you're almost in the teens of billions of dollars. And they are a solid company, folks. They're trading at some multiples still, but they are a solid company. And I imagine that many companies would be willing to pay $20 billion to own Roku if you owned all the headsets, the set tops, and everything that comes with that in terms of controlling how people access streaming. You start getting down there. That's an attractive level. Now, you know, you were up at $490. You were 3 times the value. Roku was trading at $60 billion. Not quite as attractive, but you start talking about $15 or $20 billion, maybe you think about where you can trade on this equity, but you're back to 2019. You got Roku earnings coming out on Thursday, and you got Shake Shack out with their numbers as well. Quite a pullback over the last year from 138. On Shake Shack, you're trading at 76. Now, here's a company. I think this is $2 billion valuation. They're not that big of a company. $2.9 billion, Shake Shack. And they have a move of more than 10% priced into their numbers coming out on Thursday as well. And then on Friday, we get Bloomin' Brands, we got John Deere, and we get DraftKings, which we'll finish this segment out with. DraftKings, up 0.9% right now. Talk about a pullback on this one as well, man. From $74, from $61 back in September. You bounced from $17 last week, 23, and you jump over to the Analyze tab. They're out with their numbers. Yes, on Friday. And you're talking about, what is that? 12% move priced into that equity on their numbers. And you're talking about a company valued at $9 billion. I see some value there, folks. Gambling, we love our gambling. We'll be right back to finish up the show, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up 4 points right now. NASDAQ 100 getting a little bit of a bid under it. We're up 85 points. We jump over to some of the bigger stocks out there, and they're catching a bid. Anytime you get the NASDAQ 100 popping, Amazon up by almost 0.8% right now. You jump over to Apple shares, back in the positive at 168.79. You jump to Microsoft shares right now, back in the positive as well. We jump over to Google shares in the positive as well. When we kicked off the session, all of those companies were in the red, I believe. Facebook shares up by 0.5%. Let's see how some of the stocks in the travel. There's Airbnb. They're a growth company as well. You're up 1.3% right now. Delta Airlines catching a pop again, up 2.1% right now. United Airlines up 3.7%. Keep your eye on these travel stocks, folks. They have a ways to go. Carnival up 2.1%. Right now, we jumped to Boeing shares. Boeing up about 1.3%. So quite a Super Bowl last night. Congrats to the Rams. I was pulling for Cincinnati. I was, just because they've never won a Super Bowl. Hadn't won a playoff game in 30 years. But congrats to the Rams, man. Cooper Kupp, quite a season, man. That guy, MVP of the Super Bowl. Just an amazing receiver, the season he put together. The Rams and Cincinnati, they are around probably for some time. Big fan of their quarterback. There he is, Mr. Joe Burrow. Man, quite a game. Came down right to the end. This playoffs, one of the best playoffs ever. I talked about it last couple weeks ago when this game came about. I think you had almost 6 straight games in terms of playing into the playoffs that of last-second type field goals or overtime. One of the best playoffs I can remember, and it finished right with the Super Bowl, coming down to the final 2 minutes, and quite a game. Now, shifting to a little sad story with sports. This poor Russian figure skater, man, real bummer, 15-year-old girl. So now it comes out that she will be competing because they can't preemptively suspend her because it might be irreparable harm. This has to do with the fact that she's 15 years old, and they mention this and say irreparable harm. It does matter that she is underage here, so what's going on. It's all Russia, folks. It's in context of Russia almost starting a war here. You know, it has to do with her testing positive from a sample from December 25th that just came back. Reading articles, other countries, reputable countries, they test the athletes to make sure it doesn't take so long. This market, back to the markets, folks. Basil's up next. We got markets in positive territory. It's Monday trading. Have a great day, everybody.